Yeah, so today we are going to be doing the conceptual framework, the IASB conceptual framework. Now, the first question is, what is IASB? IASB simply means International Accounting Standard Board. International Accounting Standard Board. That's the meaning of IASB. Do you understand? And when we talk about when we say conceptual framework, what does it mean? We said a conceptual framework is a system of concepts and principles that underpin the preparation of what financial statements for what for external user. That means the conceptual framework is talking about the concept and the principle that guides the preparation of what financial statement. And that take us to the topic, that take us to the standard. When we are talking about IASB conceptual framework, usually called IS1. Do you understand? So I'm still coming to what we mean by IAS. How do we arrive at IAS? And why are we using IAS? What's the meaning? What's the essence of IAS? Are you with me? Are you with me, please?
Yes, sir,
Are
we're
you
here.
with me, Mr. Badide? Please
I'm with you.
don't bother muting yourself. Do you
Okay,
understand? So far you're not in a lousy place, so that I'll be sure that you are following me.
okay, no
Do you
problem.
understand? Yeah,
Okay,
don't mute yourself. You understand? So now, how do we arrive at what IASB? I said IASB is International Accounting Standard Board. Do you understand? And I said the conceptual framework is talking about the concept and principle that underpin or guide the preparation of what financial statement to what to user. And the concept is broken down into different chapters. I get what I'm saying now. It's broken down into about 8 chapters. We have chapter 1, the objective and general purpose of financial reporting. Why do we report? What's the essence of doing financial reporting? Number 2, qualitative characteristics of useful financial information. Number 3, financial statement and the reporting. That is preparing preparing the financial statements, having the standard, the recognition and the recognition, measurement, uh, presentation and disclosure, then concept of what capital and capital maintenance. Now, what's the purpose of conceptual framework? We said the purpose of conceptual framework is to assist the IASB to develop IFRS standards that are based on what consistent concepts. Now, the conceptual framework help in developing IFRS standard. This is another complex stuff again that we need to explain. Okay. So number 2, we said assist preparer to develop consistent accounting policy. That is, it help all accountants to be what? To develop, it help the ISB to develop what? Consistent accounting policy when no standard applies to what? This particular standard transaction or event. Number 3, assist all parties to understand and interpret IFRS. Now, let's explain this thing so that we understand. Now, we said we have IASB, which is what? International Accounting Standard Board. Who are this board and what is their job? And how did this board come about? Do you understand? Are you with Mr. Bajde?
yes, I'm with you.
Hey, that place you are is too far. That means you are far from the phone.
Hello, I'm with you.
Yeah, but me, I cannot hear you. You are too far from the phone. Do you understand? So it's better you come near to the phone, please, so that we can do what we want to do fast and move. So now, before now, every profession has their own law, has their own whatever that guides them. Do you understand? But as
Yes,
a lawyer now, we have the constitution that guides them in whatever they do. In banking, yes, they have the Bofia Act, they have the CBN law, they have the EFCC Act, they have the other acts. Under CAC, Corporate Affairs Commission, they have the CAMA that guides them, all complaints, just that guides the complaint. So also insurance has their own. Do you understand? Even economics have their own. But in ICANN, or I say in accounting, we call it standard. Do you understand? We call it what
Okay.
standard. Mr. Baide, be close to your phone. It's not easy to be repeating. You are too far from that. Are
I'm
you
close to
with
my
me?
phone. I'm close to my phone.
Please, I want you to follow me, please. Dear. Because it's very essential you get this.
Okay.
So, I can hear you perfectly now.
Okay.
Perfect. I'm cool now. Let it flow. So, prior to this time in Nigeria, our own local standard is SAS, Statement of Accounting Standard. Do you understand? It was
Yes.
developed by us and we are using it and not. But because of the fact that there are issues of international complaints, do you understand? Trying to understand our financial statements. So it's so difficult for them to interpret and understand. So they need an interpreter sometimes. So for instance, Chinese want to invest in Nigeria and they want to see the financial statement of the company they want to invest in. Sometimes they will now need an interpreter that will be able to explain the financial statement for them. And sometimes what somebody is interpreting for you, you might not 100% be sure that person is interpreting it right. Therefore, can make you not to 100% agree with the person's judgment or decision because you yourself you cannot fully understand. So, because of this issue that we are having across the countries and across the globe, do you understand? They now said, okay, UK, you are using your own standard. US, you are using your own standard. This country, every country, different standard. Nigeria has a different standard. And I say, okay, why not let's come together and form a new law, a new standard that all of us will be using. And once we use it, it will be the same way we are using it in Nigeria, the same way it's in UK, the same way in the other countries. So that whenever anybody leave Nigeria and go to UK to invest, it will be easier for them to interpret the financial statement. When anybody is coming from UK to Nigeria, it will be easier for them to interpret financial statement. Anybody coming from China too can be able to easily understand. Then they all come together to form a board where two members of each country were represented. So about 41 countries came together then to form the International Accounting Standard Board, where we have two members that means from Nigeria, two members, from UK, two members, from this place, two members, from all those countries. So they come together, those two members come together to form a board called the International Accounting Standard Board.
Oh, okay.
So they now develop new standard that will make that a uniform standard that all of them will be using. And those standards they developed was called IAS, International Accounting Standard, and IFRS, International Financial Reporting Standard. So a modified version of IAS is the IFRS. Do you understand? A modified version of the IAS is what IFRS. And we have IAS1, IAS2, IAS3 to IAS41. However, there are some IAS that has been adjusted. As a result of probably they've removed them, they've modified them with a new one. Do you understand? So, and we also have IFRS, and we also have IFRS 1 to I think 19 now. Do you understand? So here comes my first assignment. Go online, go and write IS1 to whatever we have, and IFRS1 to whatever we have with their meaning. For instance, IS1 that we are doing now means preparation and presentation of financial statements. That is the IS1 and what we are doing now. So go and find out IS2. What does IS2 mean? IAS 3, IAS 4 till IAS 41. And write
Okay.
IFRS 1, IFRS 2, IFRS till whatever IFRS we have as that today. Do you understand?
Okay. Okay.
Go and do that and write them. It will be useful for you. Do you
Okay.
understand? It will be
Okay.
more useful for you. So now let's move. So now the second part is that the objective of the general purpose of financial reporting forms the foundation of the what conceptual framework to provide financial information about what the reporting entity that is useful to existing and potential what investors. Now, general purpose financial statements provide information about the financial position of the entity, statement of profit or loss, and other comprehensive income, statement of cash flow, statement of what changes in equity. That is information about the economic resources and the claim against them. So what do we say that this conceptual framework is helping us to talk about the components of what financial statement? How do we make up all the components? And what are the components of financial statement? I've mentioned them to you in the last class, and I just mentioned them now again. Statement of profit or loss and other comprehensive income, statement of cash flow, statement of financial position, and the likes. So, the usefulness of what and the objective of what the conceptual framework. It helps us guide us in preparing the financial statements. Now, two, we need to talk about that. What are the qualitative, the characteristics of a financial statement? Now, we have quantitative and we have qualitative. Do you agree with me?
Yes.
Quantitative simply means something that you can measure in
Measure.
figure. You can
Okay.
get the value of it. But qualitative is not something you can measure, but it is very essential, right?
Okay.
So when we talk about quantitative value simply means that every information in your financial statement, the calculation must be right. It must be error figure free. Don't tell me you want to write, imagine you want to write 2023, you now write 2022. You should not be quantitative. So you must have checked error, calculate very well, use your Excel to make sure that you get the right and accurate figure.
Figures. Okay.
So, but when we talk about the qualitative characteristics, you know that everybody, before you can say, oh, Mr. Abaije, we know him that he has this good character. And what are those reasons why they will say you have good character? They will say, oh, maybe because Mr. Abaije will always come to work early. Yes, he doesn't fight with people. Yes, he's always calm. He always understands people. He always bring people together. He always do so. Because of that, Mr. Abaide is a good person. How do you say Mr. Abaide is a good person? There are some traits that you will see that make you conclude that Mr. Abaide is a good person. So what are those things that you will see in the financial statement that will make you feel that, oh, this financial statement is a good financial statement? I get what I'm saying.
Yes.
Yeah. So these things are divided into two. We have the fundamental characteristics and we have the enhanced characteristics. Now, the qualitative characteristics is divided into two. You can be doing the diagram. Do you understand? And so you now just write qualitative characteristics, then divide it into two. Do two branches. Number one, fundamental characteristics. Number two, enhanced characteristics. You know how to be drawing all this board. All this board, when you so that qualitative characteristics is divided into two. We have the fundamental and we have the enhanced. Now, under the fundamental two is divided into two. We have one, relevance. Two, faithful presentation. You get what I'm saying now?
Yes.
Now, enhanced can be divided into four. So you split enhanced into four. Number one, verifiability. Number two, comparability. Number 3, timeliness. Number 4, understandability. I come again. Verifiability, comparability, timeliness, and understandability. Are you done? Are you able to write that?
Yes.
Now, let's pick it one by one. When we say something is relevant, Mr. Biden, what does that mean?
Okay, it's that is it. Hello?
You see,
Hello?
I can hear you. Continue, I
So
can hear
when
you.
you say something is relevant, it means that it is capable of serving its intended purpose.
Okay, perfect. So, Madam Jessica, I know you are on the call, so also share what do you think? You've been in this class before, but notwithstanding, you've joined this and we're also welcome and learn together. Is she still there?
Hello, can you hear me, sir?
Yeah, I can hear you.
Okay, when something is relevant, it means it's important.
It's important. We can say it's what also significant. So that means
Okay.
if I'm giving you relevant information, I just say, Mr. Biden, I just hear that something happened at Ibadan. So. You know that as of today now, that's the news on ground. Do you understand?
Yes.
Now, I not just be giving you information of what happened in Jos. Now, is it relevant again?
Well, it could be relevant. Depends on how.
Yes.
It could be a relevant information. That is if the person has somebody in just or something, an
Oh, good.
information that could be important to that person in that environment or area.
Perfect. Do you understand? But what of me just telling you about COVID-19 now? Is it relevant?
No.
COVID-19 is not relevant again.
Thank you. Why?
It's an information that is old.
It's old, Abby. So
Yes,
that
sir.
means you feel that the information is absolute. What I'm just saying, what we have had, we have forgotten about it. Now, you can agree with me that relevance also deals with what? Making sure that information is not too old, Abby. Right? Now, that is it. So that means every information in your financial statement must not be what? Obsolete. Do you understand? Everything you are going to be putting in your financial statement must be what? Relevant. Don't put information that we don't want to, that is not of significant value. Imagine you are telling me how you make. Okay, the only thing I want to see financial statement is that we grow from 100,000 naira to 200,000. How you grow the money is not my business. It's not the user business. They just know that, these people are probably make more sale. The only thing they will be able to interpret is that, probably they produce more. I guess what I'm saying now. So number 2 is what? Faithful presentation. Faithful presentation. Faithful presentation. So Mr. Biden, what do you understand? Yeah, representation or presentation, anyone. Still the same thing. So what do you understand by faithful presentation? Faithful presentation simply means that from the word faithful, do you understand? Information should be what? Information in the financial statement must be complete, must be neutral, and must be free from error.
Okay.
Do you understand? So don't be telling us one information and just skip and did not give us the full information. However, the law gave us minimum disclosure. Some things that you should disclose, some things that you should not disclose. But those relevant information that you should disclose should be disclosed. Not that you now give us half of it and you silent on the remaining one. Then information should be what? Neutral. That is, it should be information that they are real. Do you understand? And they should be what? Free from what? Error. So that means whatever you are putting in the financial statement must be neutral, must show when we go to and see reality, we should be sure that we are seeing it in reality. It should not be biased. Am I making sense?
Yes.
Yeah. Now let's go to the enhanced characteristics. All these things we are saying is that before we can say this is a good financial statement or this is a good financial information, what are those qualities we are going to see? That's what we are listing out.
Okay.
I remember I used the example of before you can say this person is a good person and all those things. Remember I did that. So now the next one is the enhanced characteristics. The enhanced characteristics can be divided into 4. We have verifiability, understandability, timeliness, and comparability. This thing is English. Now, when we talk about verifiability, what do we mean? It's just the opportunity of allowing a second opinion. Do you understand? That is the essence of audit today. You agree with me that people rely more on audited account than any other account? Abi?
Yes.
Because why? Is because somebody else has double checked. Because sometimes you find out that you are doing the same work 10 times and you are calculating and you are still getting another figure. And me, I will come and do it and I'll get another figure.
Yes.
And this guy will do it and get another figure. So that means if you as an accountant, the reason why people will rely on the information is that somebody else has also cross-checked the figures that they are right. And that's the sense of what? Verifiability. And that's the reason why today we do audit. Because it makes it make meaning and make it like, this, at least to some extent, this information is what? Free from what? Error. Am I making sense?
Yes.
Yeah, we'll move next to what? Comparability. Comparability. So what the comparability means? That is, you should be able to weigh 2 options. You should be able to look at 2 opinions. And that's why today you will see that financial statement of a company will always have 2 financial periods, 2 years. Right? Have you ever seen that?
Yes.
That's why if you are preparing 2023, you will see they will put 2022 again there.
Yes, for comparability.
Yes, so and why are they doing that? They want you to be able to compare. Do you understand? See how they perform in 2022. They have performed more in 2023.
Okay.
I get what I'm saying now.
Yes.
And when you are able to compare, you get to know how they have improved or how they have performed over time. Do you agree with me?
Yes.
So that's the comparability. So you need to compare 2 financial years to be able to monitor their performance. Do you understand? So next is timeliness. Mr. Babajide, explain what you understand by timeliness. I want to hear your opinion on timeliness so that I'll not be the only one talking. Please, let's be fast.
Okay. By timeliness, it means that the financial statements should be produced when they are needed at the exact time when they are needed, so that they can be used for decision making.
Exactly. That means imagine now, company is just releasing 2020 audited account. Is it useful?
Well,
I'm asking, is it useful?
It won't be useful. It won't be useful for. It won't be useful for decision making, but it can be useful for compliance purpose.
Compliance purpose. Compliance. Do you know that the compliance information is always even speed? Imagine you are just on compliance is just reviewing 2020 book now. Doesn't make any sense to them again because it's obsolete. okay, what does compliance wants to do? Compliance wants to also make some decision, want to also review. So, and 2021 has happened. 2022 has happened. Why did he now still want to? Why is it now useful for him? No, because the information there is very, don't forget you have prepared 2021 and you have done restated. That means even the audited account in 2021, you have adjusted some things there. And the current one is what you have in 2022. Are you getting what I'm trying to explain?
Okay.
So I don't know what it might be, but what I'm trying to say is that you know that when you prepare another year account, you restate the former year, and by restating, you would have adopted some information there.
Yes.
So that means it will render the existing one, former one, useless.
Okay, I understand.
Yeah. So timeliness. Then what we are saying that financial statement should be released on time, as at when due, and that makes it to have a good quality. Then lastly, we'll talk about understandability. Please, every information in the financial statement should not be too ambiguous. It should be easy. Even let a layman, a person that did not even go to school, let them be able to read the financial statement and understand, so that they will determine whether they will invest or not. Do you understand?
Okay.
Don't write too much of grammar. Don't make it difficult for people to now go and be looking for dictionary to explain what you write in the financial statement. Otherwise, it will not be able to help them to make decisions. Do I make sense?
Yes.
So now, another thing is that measurement basis of element of financial statement. Don't forget, there's a difference between component of financial statement and element of financial statement. Component of financial statement is statement of profit or loss, statement of financial position, and the likes. Why element of financial statement is asset, liability, income, expenses, and capital. I come again. Assets, liability, expenses, income, and what? And capital. Now, how do we measure the element of financial statement? One, we use what? Historical cost. We use current cost. We use net realizable value, and we use what? Present value. Let me take them one by one. Historical cost is basically used on assets. Do you understand? Which simply means the original amount at which an asset was purchased at what? At initial. You know, when you purchase an asset in in particular year, in your books, that is the amount you carry the asset in your books, yes or no?
Yes.
And that is what we call what? Historical costs. Now, current cost simply means fair value. That is the current market price of that item, that asset in the market. That means if you have an asset that you have been representing in your book, maybe you bought it 3 years ago, and you said the cost is what? 300,000. Now, if as of today, that asset, that same asset has moved to 500,000, what is the current value? 500,000. So the next one is what? Net realizable value. Net realizable value is usually basically used on stock, on inventory. And it simply means that your selling price minus what? Incidental selling expenses. That is, if you have agreed that you want to sell this item for 10,000, and you now minus all expenses, all selling expenses, like cost of advert, cost of branding, repackaging. When you minus all those costs from the selling price, the money you get after that is called what? Net realizable value.
Okay.
So when we are doing IASB, we'll talk more on that. Then the next one is what? Present value and discounted value. Present value and discounted value is simply telling us that 1 naira today is not 1 naira tomorrow.
Yes.
So that means for any amount I have or any asset I have, what will be the future value of the asset? Do you understand? And that's why we said that Present value refers to entity expectation about the amount, timing, and uncertainty of the future cash flow. Am I making sense?
Okay.
Now we move. What are these accounting standards? Now, for every standard, your standard should be able to answer these 5 questions. That means if you see IS2, IS2 basically means inventory. Do you understand? When you now see inventory, how do you, number one, you should be able to know that, okay, recognize that IS2 means inventory. That means you are able to recognize what IS2 means, right?
Yes.
2, if you now say that, okay, this is inventory, you should be able to define it. Because once you cannot define it, it will be difficult for you to put it in the financial statements.
Okay.
Please, 1 minute, let me mute. I want to just attend to something. 1 minute, just hold on.
Okay.
Hello?
Hello.
Yeah, I'm back. So now, we said you should be able to what? Define it. Oh, inventory simply means what? Stock. Or it simply means what? Items that an organization trade. Do you understand? In the ordinary course of the business. You'll be able to understand that. Now, after you understand that, you should be able to, don't forget what we are doing is financial statement. And most of the time, what is in the financial statement are something that you can quantify in money. You know the value, right? So how do we now measure this inventory? When we have an inventory now, how do we measure it to know the value? I get what I'm saying now. The next is that, okay, even after knowing the value, where will you present this thing in the financial statement? Now, if I'm looking for inventory now, obviously I know that where the only place I can see, right? Because I know that it's being presented under the current what asset. So, and lastly is what? Disclosure. Standard, we always tell you, it's not everything that you disclose in the organization, but there are minimum things you should disclose. Because when people are now making decisions, they need those information to be able to make decisions. I get what I'm saying. But not everything that happens in your organization is what you will also disclose to the public. Is not necessary.
Okay.
Abi?
Yes.
Now, what is the purpose of this accounting standard? It's just to improve the reliability of financial statement. People should be able to rely money that there is something guiding them. So whatever they prepare here, they've used a guide to prepare it for us. Do you understand?
Okay.
And also to ensure that financial statements of organization are prepared in a consistent manner. Because when you keep on using a guide every time, you find out that your account will not be consistent. Am I making sense?
Yes.
Yes, I'm just picking them randomly. And also to what? Ensure uniformity. Don't forget that's the sole aim. If in Nigeria we are using IAS and IFRS, and in the UK they are using IFRS and IAS too, it will make sense, Abi, because everything will be uniform.
Yes.
Yeah, and mind you, when they came together to form that International Accounting Standard Board, the only country that didn't join them to form it, and till today they are still using their own local one, is US. And that's why till today, US is still using GAAP.
Why?
Yes, because they said that why not let everybody abolish their own and come and use their own? That they should, US believe that they are the giants, Abi. So they want everybody to come and use their own. They're not saying no, we will not use anybody else. We want to form a new one. So and this US did not agree. You understand? They left US and all other countries came together. They form it and they did. That's why it's easier for you when you have ICANN to do it.
Hello, sir.
Hello.
I can hear you.
So in US, I know that their professional accounting exam is it CPA or
Yes,
the professional qualification is CPA.
yes.
So it means that since they are not using the same, they are not their standard is not the same as uh, the one set out by IASB. It means that even a Nigerian chartered accountant will find it difficult to pass the CPA exams
Well,
because
not really. Not really, because yes, we are using different standards, but we still follow the same principle. Do you
okay,
understand?
okay,
Yes, there's still similarities in all these things. So it's not as if their own is completely new or different. Do I make sense?
yes,
Now, let's move to another key part. Sorry, this class will be a bit, once we are done with this, we'll be able to, because I need to, I, I'm a bit trying to manage myself for the day, yeah, because I was so busy and I had to move from main island to mainland, so it was more dicey. So, but let's see how we can go. So we might finish this early, but just know that, and it's possible. I'm still looking at it that maybe a class will be held on Friday, maybe by 9. I'll let you know. Do you
okay.
understand?
I will appreciate that.
So
Yes,
I'll let
yes,
you know.
because we need to of very fast too.
Yes, so I will let you know. So if it will be possible, because I
Okay,
will look at my schedule. So once I confirm with my schedule, I would notify them,
okay,
the director, so that they can get us informed.
okay. Thank
Do you
you.
understand? Yeah, so let's talk about
Okay, okay.
accounting concept. Accounting concepts. What are accounting concepts? We said accounting concepts are principles upon which preparation of accounting records are based, which are universally accepted. So whether it is UK or US or Nigeria or anything all over the world, this concept is universally what? Acceptable. You get it now?
Okay.
This concept is what? Universally what? Acceptable. Number one, entity concept. Entity concept. Now, this concept is simply saying that the owner and the business, they are two different persons. That means Babajide Ajayi is different from Babajide Ajayi Limited.
Yes.
Dangote Aliko is different from Dangote Cement.
Okay.
Do you understand?
Yes.
So, which means that a company exists on its own and an individual exists on their own. However, business, proprietorship and partnership are not separated from the owner. The only business
Okay.
that is separated from the owner is what? Limited liability company.
Okay.
You understand? So, and that's why sometimes they breach this entity concept.
Okay.
Now, let's move. Going concern concept. Going concern concept. What does going concern concept mean? Going concern concept is saying that it is assumed and believed that a business will continue to be in existence till perpetuity.
Sorry, there's a background noise. I don't know if it's fan or something. It's apparent with the voice.
It's
But I don't know
appearing
if
with
it's
my voice.
about the I don't know if it's from this. space for
I
them
don't think
to
it's from my
grow in
side.
that area.
I don't think it's from my side anyway. So if you can check your side, I'm not sure it's from my side because I don't have a fan on here. So now I think it has stopped now.
Yes, it has stopped.
Yeah. So
Thank
two
you.
going concern concepts. We are saying that it is believed that a business, once you set up a business today, the business will continue to be in existence. Till what? Till perpetuity. Sometimes even after the death of the owner, business will still be existing. Abi? So that is why a company will borrow money today and say they are borrowing money for 10 years, 15 years. How are we sure that even the owner will be alive for 15 years? It's because business are what believe that they will continue to what exist. And that's why they will prepare account on that basis.
Okay.
Yeah. So the next one is what? Dual aspect concepts. Dual aspect concept. And this is where we got our, please, let's make sure that we are in the quiet area. Somebody is banging the door, doing everything together there. If you want to do that, do something, you can just mute yourself so that it won't affect. Earlier now, I wanted to do something. I said, give me 1 minute. I muted myself to sort out what I want to sort out. So that I will not disturb every other person. So now, we said dual aspect concept. What is dual aspect concept saying? It is believed that we believe that account has what? Two sides, debit and credit. Do you understand? And that's why we said for every debit entry, there must be a corresponding what? Credit entry, vice versa. That means accounting transaction will be posted twice in two places. Can you hear me? Are you still with me? Hello?
But yes,
Hello?
sir. But yes, sir.
Okay. So say accounting transaction has what? Two sides. And that's why we said for every debit entry, there must be a corresponding what? Credit entry, vice versa. Now, and that's what takes us to another one of our topic, which is chapter 4, double entry. So, by the way, you've heard about double entry very well, right?
Yes. Hello. Yes.
And sometimes it's always a major aspect that people like, double entry. It's always giving us problem. Now let's talk about the next one, historical cost concept. Now, historical cost concept is saying that assets should be measured at their original what? Price. That is, in your financial statement, you should always make sure that your assets that you want to put in financial statement carry the what? Original what? Cost price. I get what today we have revaluation, and revaluation adjusts sometimes the what? This historical cost. But that's not our purpose for now. Now, the next one is what? Accurate concepts. Yes, I can remember, Mr. Baide, I gave you basis of accounting last class. We talk about cash basis, we talk about cash basis, accurate and breakup basis, right?
Breakup basis, yes.
Yes, so the same way accurate basis is set there is the same way we are doing accurate basis here, which states that revenue should be recognized when what the service the money has been earned, not necessarily when it has been received. So far you've earned the money, even if you have not received the money, you what put it as what? Revenue. And expenses should always be what? Expenses should always be what? Recording immediately what you have render the service. Even if you have not made payment for the service, so far the service has been rendered to you. You what? You record it and you recognize it. Am I making sense? Am I
Yes,
making
sir.
sense?
Yes,
Yeah.
sir.
So the next one on the list is what? Matching concept. Matching concept is saying that revenue and expenditure should be what? Should match each other in the same accounting year. You know that if you agree with Mr. Bayede, you cannot get any revenue without incurring expenses. Do you agree with me? Do you agree with me?
Yes.
Hello? Because
Yes.
even if
Except,
you,
hello.
yeah, I can hear you.
Except if you are a thief.
Except if you are a thief, yes, that's true. Because if you want to be selling something, you must have incurred money to purchase those things before you say you want to be what selling. So that means expenses would have gone first. And as I said, except you are a thief, probably you've stolen those things before you sell them. Then you say you don't incur any expenses. But as long as you have to uh, um, gather money, do you understand, to buy those things, then you have incurred expenses. So you should not incur expenses in 1 year and be recognizing revenue the other year because it will not help you to be able to match and it will not be able to show the true picture of the organization. So the best thing is that revenue and expenditure should match each other in the same what accounting period. Are you with me, Mr. Babajide? Yeah.
Yes, I'm with you.
Okay. You got my explanation, right?
Yes. Yes, I got it.
Now the next one is what money measurement. What does money measurement say? He said only item that can be measured with monetary value should be included in the financial statement. That is only item that you can convert, you can get the value, you can get the amount. You understand what I'm saying? Is what should be included in the what financial statement. Otherwise, no. Anything you cannot convert to value should not be what included in the financial statement. Am I making sense?
Okay.
Now the
Yes,
next one
you
is
are.
what? The next one is what? Periodicity concepts. It is assumed that accounting period is usually divided into 12 calendar months, which is what? Either January to December or wherever you want to start. You shall end in December. Do you understand? Some company run January to December. Some company run May to June. Some company run January to maybe I'm no February to the following year, depending on the company. But what we are saying is that it must involve for 12 months. Am I making sense?
Yes, sir.
Now, next one is what? Prudency concept. Now,
Mm.
prudency concept is saying that profit should not be anticipated until they are earned. For instance, now
Okay.
I about maybe you have a contract, you understand, and you know that that contract will give you money. Now, in your financial
Okay.
statement, you have already gone and record the profit you are expecting from the business you have not started.
Okay.
Yes, at that point, you are not prudent.
Hmm.
Do you understand? So
Okay.
prudency comes with the fact that you you recognize the real transaction as they
Okay.
occur.
Okay. Okay.
Now, the next one is what? Objectivity. Objectivity is usually talking about being biased. That is, every figure in the financial statement should not be biased. For instance, I should not because, oh, I am your senior manager, I should now say that, see, I will not approve your leave. Oh, if you not do this, if you not do that. Am I objective? No. Hello? Hello? Hello, can you
Hello,
hear me?
hi.
Oh,
Yes,
yes,
Yeah.
sir.
I can. Yes, we can hear you.
Okay, so next we have some concepts too. We have concept of materiality, concept of consistency, and we have what? Offsetting. Now let me pick those concepts one by one. Concept of materiality simply means that if for financial amounts that are what? That are of significant. Now I asked this question in the physical class. Mr. Baide, how much will you lose or will it lose from you that you not even bother, that you feel like na normal thing, that one na small money.
Okay, let's say like two k.
So 2K. So that means 2K is not material to you, right? So that means financial accountant or auditor should focus on transaction or decision in the financial statement that are of what? Material importance. That the effects of that transaction can cause huge damage to the business. But I can tell you that if you lost 20,000 naira now, it will really pain you because it's very significant to you, it's very material to you, right?
Yes.
That's what we are saying. So sometimes organization accountants will go and be focusing on unnecessarily, and they will not leave
Mm.
necessary. So that's what we are saying.
Mm.
That concept is saying that no, accountant focus on transaction, focus on events that can have a significant impact in the organization.
Okay.
So that's the concept of what materiality. Now let's talk about concept of consistency. Concept of consistency is just saying that you should apply the same rule over time. We have different method of depreciation. We have straight line method, reducing balance method, some of the digit method, right?
Mm. Yes.
Now we are saying that be consistent. Don't use straight line method in this quarter. Next quarter, you should use reducing balance. Next quarter again, you should use another one. No,
Okay.
that's what we are saying. That you should be consistent with a particular one. If you are using this concept, use it. If you want to change, for any reason why you want to change, there are procedure for changing.
Okay.
Do you understand? Now, the next one is what? Offsetting. Offsetting. Offsetting simply says that you cannot use debt to pay debt. You cannot offset asset for liability. I get what I'm saying now. You cannot offset what asset for liability.
Okay.
That's why I said offsetting. IS1 required that asset and liability and income should not be offset against each other. Am I making sense?
Okay. Yes.
Yes, sir.
Yeah. So those are the concepts and the standard that guides financial accounting, preparation of what financial statements. Do you get my points now?
Okay.
So,
Yes.
any question from so far? Any question from
Hello.
this so far? Yeah, any question from this so far?
Yes. Okay. Yes,
Go
I have
ahead.
a question, sir.
Go
Should I
ahead.
say, okay, I have two questions. The first one is when you were discussing the conceptual framework, you said that conceptual
Okay.
framework is also the same thing as IAS1.
Yes.
So what does that imply, sir?
Okay. IS1, I told you that what IS1 is talking about is a guide of how to prepare and present the financial
Okay.
statement.
Okay. Hello?
Are you yeah, can you get me now? Are you getting me now?
Yes, I'm getting, sir.
Yeah. So any other question?
Okay, so now the second question is about offsetting.
Okay.
You said that that the concept requires that it says that you can't use debt to offset debt. So I know that liability is a debt. Okay, in a way, does it mean that asset is also a debt?
Okay. I'm trying to get your question.
You said that when you were introducing offsetting, you said that one cannot use debt to offset debt. So
Yes,
I
agreed.
wanted, okay, so now can you please shed more light on that, sir?
Okay, what we are saying is that let's say that you have an asset with a bank. Do you
Okay.
understand? And you are owing the bank the same amount that your asset worth. The bank cannot
Okay.
just say because you are in them and you have money with us, let us offset it. It's not possible.
Okay.
So that's what we mean.
But that asset that you have with that bank in such an instance is it's not the debt now. Hello? Hello?
Yeah, can you hear me? I can hear you.
Yes. I said that the asset you have with that bank is not a debt.
Yes.
Okay. Okay, so that's what I wanted to clarify. I wanted to be sure if it was a mistake on your part by saying that you cannot use debt to settle debt.
Okay. I get your points now. So we hope it's clear now.
Yes, sir. It's not clear. Thank you, sir.
Okay, Madam Victor, any question?
No, I'm fine, sir. Thank you.
Okay. So we'll end this class today. Yeah. So as I said, it's possible we have another one on Friday, maybe around 9. Do you understand? So we'll be
9
taking
p.m. or 9 a.m., sir.
9 p.m.
Okay, sir.
So we'll be doing accounting equation. Accounting equation. Do you understand? I think that's the next. That's okay. We've done accounting equation even at the physical class, so that we'll be on the same page with the physical class. Do you understand?
Okay. Okay.
Yeah. So let's shift that to 9 a.m. I will tell them to create the link. So that will be 9 p.m. on them
On
Friday.
Friday.
So that, yeah, we'll do accounting equation so that we'll now be on the same page with physical class. They will also
Okay.
be moving. So Mr. Baide, my assignment is that you will do all these practice questions. Question
Okay.
1, question 2, question
Okay.
3, and question 4.
Okay.
Yes.
Okay. No problem.
So any other question for me?
So please, sir, please, like I said the whole other time, that I'm so busy, sir. So now, please, I just want to crave your indulgence on something. If possible, you can just be checking up on me and the all other members of this class, so that um one will constantly study as well as do assignment and practice.
Okay, well, I do that for the physical class, but I'll try as much as possible to start that on the online class now. Do you
Okay.
understand? But there's a
Okay.
way people know me from the physical class. I can just drop a message just to joke and just to ask questions, just to make sure that go keep people abreast and to make sure that people are at least responding and listening. But I will start that on the online class too. No problem about that.
Okay. Okay.
Yeah.
I will appreciate it. Thank you so much.
Okay, so thank you so much. So by Friday, he said I'm a bit longer tired. Do you understand? I would have said we should continue, but I don't want to skip
Yeah.
off. Do you understand? Uh-huh.
All right, sir. Thank you so much.
Yeah, so we'll continue from there on Friday. So we'll be on the
All
Okay.
same
right, sir.
page. Yes, we'll be able to now
Thank
listen.
you.
So thank you so much for your time. So don't worry, there will be some days that will even extend to after
Sure,
11 so
brother.
that
Sure.
you will not feel like thank God we'll be finishing early. Do you understand?
Okay.
Sometimes we'll finish even sometimes 12 o'clock. God will help us.
Amen.
All right.
Yes.
Thank you so much. I
Okay.
appreciate
Yeah.
you.
Okay.
All right.